You're watching the news at 1. Before we get an overview of the markets now, Nedbank's impressive growth has been weighed down by its Pan-African banking associate Ecobank, causing the group's overall interim profit to decline slightly. The company did, however, declare an interim dividend, while Nompumelelo Siziba is standing by the JSE with Nedbank CEO Mike Brown. Nompumelelo, over to you.
Thanks very much, Nzinga. Yes, well, as you mentioned, I'm joined by Mike Brown, CEO of Nedbank, and their headline earnings dipped by 2.9%. That's for the 6 months ended June to 5.3 billion rand, and that was partly, well, the big factor for the decline was, as you mentioned, Ecobank, that interest in West Africa. Let's get straight into the interview now. Thanks very much for joining us, Mike.
Thank you.
Okay, so just give us an overview of why we've seen this decline in your headline earnings.
I think the best way to look at our results for the first 6 months is as a story of two chapters. If we look at what we call our managed operations, so that's probably 95% of what Nedbank does, our businesses in South Africa, they actually grew their earnings just a touch under 7% in a very difficult economic environment. So we think that that was a credible result. And then we account for our share of ETI's losses. ETI, it's a little bit complicated, but they report their results, we account for their results quarterly in arrears. So their result was known to the market 3 months ago. So this is us accounting for an historic result, and that took our 7% growth down to the 3% reduction that we spoke about earlier.
I understand that, but obviously for shareholders looking, this is not the first time that Ecobank has weighed on your results. So one asks the question, why does Nedbank feel the need to hold on to that particular interest?
I think that's a very valid question, and I'll answer that in a couple of ways. So firstly, when we first invested in Ecobank, we knew it was going to be a long and difficult road ahead. We were expecting volatility. It came a little bit sooner than we thought, given that the Nigerian economy went into recession. And that's really been the biggest challenge that they've been dealing with, is the impact of that recession on their bad debts. So strategically, it's still important for us for the long term. We have nearly 100 of our customers who use ETI for transactional banking in the rest of Africa. But importantly, right now, we think that the worst is now behind from an ETI point of view, and the outlook is in fact improving. And if one looks at the ETI share price, it's actually up nearly 60% year to date. So we're really accounting today for their historic challenges. On a forward-looking basis, we think that ETI will still be a valuable contributor to Nedbank's earnings.
Okay. And then when we look at the South African market in general, we know that the period that you're reporting about, the 6 months to ended June, is that recessionary period. So when you look at things like your net interest income and your fees, which grew below the rate of inflation, how do you see consumers and business right now?
I think if we look into what our customer base is doing, generally what we see is people being more conservative. What does that mean? It means consumers are not buying a new car, they're not upgrading their house. That means our interest income is going to grow slower because we're making less loans. We're also seeing customers on the wholesale side delaying big corporate projects. But then what we're seeing is people are saving more. We're actually seeing very strong growth in the liability side of our balance sheet, and people are still repaying debt. So generally speaking, our balance sheet is growing slower in this environment, but people are also transacting less. They're buying less, they're buying in smaller bundles, and really what that does is it means lower growth in net interest income and lower growth in non-interest revenue as a consequence.
Indeed. And in terms of the interest rate cut that we received recently, not just for Nedbank alone, but for the banking sector in general, is that a negative thing?
Yeah, so, I mean, generally the way that banks think about interest rate cuts is it's good for the consumers, and that generally comes through in lower bad debts. But right now, bad debts across the sector and for Nedbank are at all-time lows. So it's difficult to see how bad debts are going to go even lower than they currently are. So it's unlikely that we're going to get any benefit in bad debts from the cut. We'll probably get a little bit of pressure in our margins from something called endowment. It's quite complicated, but it's the money we earn on our own shareholders' funds. So I'd say it's marginally negative in the short term, but if it does help to boost economic growth in the medium to longer term, clearly that will help.
Indeed. Now, it's during the reporting period that obviously we were downgraded to junk status, including banks. So to what extent has that impacted on your ability to source funds to lend to other people?
So technically it was the foreign currency ratings of the country that were downgraded below investment grade. And because the bank's ratings are capped at the country, whenever the country's ratings move, the banks move to be equal to that. The foreign currency ratings have very little impact on banks' funding. And in fact, if we look across our funding mix, there was almost no impact of the foreign currency downgrade. If there's a domestic currency downgrade, then that very definitely will have a much bigger impact on the South African economy and on the price that banks pay for their funding, probably somewhere between 5 and 10 basis points on average across our funding base.
Okay. And then lastly, and quite importantly, Mike, you have been at the forefront of business in terms of engagements with government and labour in order to steer the country in the right direction in terms of economic growth and so on and so forth. But I wanted to ask, has the momentum changed since the cabinet reshuffle at the end of March?
Very definitely we lost momentum post the cabinet reshuffle. You know, the CEO initiative was set up initially to try and prevent a ratings downgrade, but very quickly our work migrated to what do we need to do to get a more inclusive growing economy, because that's really how to prevent a downgrade. If you read the rating agencies' reports, they attribute the downgrades to the cabinet reshuffle. So that very definitely has reset the relationships. We're currently trying to work on how to go forward. But very importantly, the CEO initiative has met several times since the downgrade. And, you know, business very definitely wants to continue to play a role in helping grow the South African economy. So things like the SME fund, which has now got 1.5 billion rand of money from the private sector in it, is up, running, and will start dispersing in the second 6 months of the year. We continue to work on the youth employment scheme initiatives. So while it was very definitely a setback, as business, we know through any setbacks, we still need to do as much as we possibly can to help the economy grow and, as a consequence, enable people in South Africa to get jobs.
Well, on that positive note, we'll leave it there. Thank you so much, sir. Well, that was Mike Brown. He's the CEO of Nedbank, just giving us a little bit of an overview on those results. We go to a short break just now.